All right. Good evening. Good evening, everyone. Good afternoon. Good morning. I don't know what time you're watching this video. My name is Matthews. I'm a trader. I'm a forex trader. So today, I thought of doing something very important in terms when it comes to forex trading. I want to cover a topic which is very cardinal. I'll look at support and resistance, and also how to trade it, how to draw them correctly, and also look at support. I'll look at take profit and stop loss placement. All right, please walk with me through this short presentation. Okay, right. So let's get going. Um, Introduction to forex trading: support, resistance, stop loss, and take profit placement. Okay, so what is support and resistance? Start with. Okay, so support and resistance are basically these are areas on your chart where price is respecting. These are areas in your charts where price is failing to penetrate, either going upwards or going downwards. Okay, so the upper one being resistance and the down one being support. As simple as that. These areas price is respecting and price doesn't seem to go through them. Okay, remember these are not specific price points, they are levels, they are areas. So don't just think that support and resistance is just one line. No, it's an area. Okay, in simpler terms, when price is approaching these areas, price will react. By reacting, I mean price will start showing signs of reversal by showing reversal candles, reversal patterns, and long wicks. So we have to be extra careful and precise when drawing our support and resistance areas. Since these are the areas that we use to determine as turning points of price. Okay, so we have to really draw them correctly. Not only that, we also use them as our support and to determine where we put our support and resistance. Support as resist, our stop loss and take profit. So we have to draw them really as precise as possible so that we don't found on the wrong side of the train, because when you draw them wrongly it can really affect you. Okay, let's go on. So let's look at how not to draw support and resistance. What's the wrong way of drawing support and resistance, which I've seen many traders do, especially startups, the newbies. Okay, so people draw support and resistance like this. And this is too messy. You end up having analysis paralysis. If you try to analyze the chart, if you look at this chart, it just looks like someone was just drawing lines anyhow. Okay, doesn't look pleasing. It's confusing and everything. So you don't have to draw your support and resistance like this. It's a wrong way of drawing support and resistance, and please don't do it like this. Okay. However, what's the right way of drawing support and resistance? Let me show you. Okay, let me show you how to draw them the correct way. If you look at this chart, I'm sure you can appreciate how neat this chart is. Clearly, you can tell which areas are areas of value in this chart. For example, you can see that resistance is being represented as red, major resistance as red, then a minor resistance is being represented as black, while green is being represented as major support. Okay, you can see that these are areas where the market is respecting. You see, market failed to break these areas. This is support. Market failed to break this area. It's resistance. Okay, here Price failed to break here 1, 2, 3, 4, 5 times. Market failed to break. Market failed to break this area 1, 2, 3 times, 4 times. You see, not in the first place say that these are areas where the market is failing to penetrate. That's what support and resistance mean in simpler terms. Okay, so let's go. How are we supposed to draw these lines, these areas in the chart? How are they supposed to be drawn? All right, work with me. The first, these are not hard and fast rules. I mean, this is just my opinion of how I draw my charts. There are different ways of looking at it. Okay, so let me teach you how I do it. Okay, the first one is to go to your higher time frame. Go to your higher time frame. Look at the chart so that you have a better perspective of the chart, so that you see the bigger picture. Go higher. If you're a day trader, use something like a daily chart or weekly chart, if you will. Okay, you have a better understanding of what the market is doing on a higher time frame. Like that, you're able to you understand that okay, this price can turn around here and there. Okay, so it's very important for you to look at the market on a higher time frame. You zoom out of the chart to get a better view of the chart. So you can zoom out to tend to see kind of the same, but yeah, try to zoom out, alright? Number three, you draw the obvious levels on your chart. When you zoom out, when you go into the higher time frame, try to plot support and resistance on the higher time frame. Alright? Try to see which areas are being respected. Usually, actually, the price support and resistance drawn on higher time frames carries much more significance. So if it's able to hold on the daily chart, for sure, if you come to the 4 hourly or the 1 hour chart, if it holds, the very important area is very significant. So you have to treat it as such. Okay, so go to the higher time frame, draw the most obvious lines. All right. Don't draw every line or level that you see on the chart, but only try to find the best levels that have at least 2 or 3 touches. Okay, those qualify to be significant areas of value. However, remember that the more touches it has, the more significant it becomes, right? Yes, but also the more likely that area is likely to be broken. So the best is to look for at least 2 to 3 touches at most, because if price has tested that area more than 4 to 5 times, the 60 time price will most likely break. So you have to be aware of such so that you don't fall in the wrong side of the trend, because the more times an area is tested, the more likely it's likely to break. So always remember that. Yes, it is important to have a number of touches, but those number of touches should be limited to less than 5. Because if it has more than 5, more than 6 touches, then the chances of that breaking out is high. Okay, let's move on. So we need to remember that it takes time to master any good skill. Okay, it takes time for you to be able to identify and draw good support and resistant areas. But just like any other good skill, it takes time and practice to master, right? So you need to give yourself time, practice, practice, and practice until you get it. All right. So how do you trade support and resistance? You've identified, you know how to trade support and resistance. Okay, you know how to draw them. Okay, you know how to identify them. But how do you trade them? What's the best way of trading support and resistance? So when you've mastered this skill, it will be very easy for you to identify these areas and draw them correctly. Not only that, you also be able to trade them correctly. Let me teach you how to trade support and resistance. First and foremost, you can only trade support and resistance when the market is ranging or consolidating, which we call stacking a box. You don't want to be trading this when the market is in a strong uptrend or the market is in a strong downtrend. You don't want to do that. Find an area in the market which is in a range. So you find this everywhere. I mean, just start looking, just start searching on the chart to find that you find different charts which are in consolidation. Because there are only three things: it's either the market is in an uptrend, downtrend, or consolidating. So to try and look for that market which is consolidating and try to draw support and resistance, then you can look for trading opportunities there. So this is where the phrase comes from: buy low, sell high. So you literally want to buy when price is at support. You want to look for buying opportunities when price is at support, and you want to look for selling opportunities when price is at resistance. Okay, so this is how it is. So basically, you'll be looking for, or rather waiting for, buying opportunities at support and selling opportunities at resistance. You don't just sell or buy blindly. You wait for confirmation. You wait for price to give you a direction. So it's all about confluence. Confluence is confirmation. You want price to give you a direction. Don't predict where the market is going to go, but wait for confirmation. So what confirmation are you going to be waiting for before placing that trade, that buy or sell trade? Well, let's get into it right now. So if you're going to buy support, here are some of the things that you're supposed to be looking for in order for you to take that trade. In order for that trade to become a high probability trade, some of the things that you look at. Okay, you want to see that momentum is when momentum is reducing as price is coming to that particular area which is support. You want to see the size of the candles of those red candles reducing as price is coming to support, and that will tell you that price is most likely to reverse because momentum is losing. When momentum is losing, it might mean that most the sellers are trying to take their profits off, most likely, which means that the buyers will kick in and take the price higher. Okay. Number two, you want to see that price is being rejected quickly as it comes to support, and you want the rejection candles to close bullishly. Okay, so you want to find some of these bullish reversal patterns at support for for that trade to be a high probability trade. Okay, so you want only to take high probability trades that have a high chance of being a winner. In FOREX, it's about probability. So for in order to increase the chances of your odds of winning, you need to have confluence. You need to have an edge in the market. All right. So some of the candlestick patterns are a hammer, what we call a hammer, a bullish engulfing pattern, morning star, tweezer top, tweezer bottom, sorry, dragonfly doji, inverted hammer, and the three green soldiers, and the other ones. So when you see these candlestick patterns at support, any of these one at support, then gives you an edge in the market. So meaning you have confluence of support and a reversal, a bullish reversal pattern. When you see these ones, it gives you an edge in the market. Doesn't mean that when you see these ones buy immediately. No, that's not how you trade. You don't trade uh, candlesticks in isolation. You wait for confluence, you wait for confirmation. All right. Okay, let's move on. So these are some of the bullish reversal patterns. Okay, just as mentioned previously. So this, for those who don't know how they look, this is how they look. This is what they look like. This is the three green soldiers, the spinning top, the piercing line, the tweezer bottom, the dragonfly doji, inverted hammer, bullish engulfing pattern. These are the ones. Okay, and then those are some of the bullish reversal patterns that you want to look for before placing a buy trade, okay, at support. When you follow these, you realize that you only take high probability trades because you have multiple confluences, right? Let's go. So if you don't know these candlesticks I was mentioning, you can contact me. I can teach you these things, and also have books that you can go through and learn these candlestick patterns and their interpretations. So let's move on. Okay, confirmation to sell at resistance. Remember we said buy low, sell high. So at resistance, want to be looking for selling opportunities, right? So just like we said, what are you supposed to look for? You want to see that momentum is reducing when price is coming to resistance. What are you looking for? You're looking for reduction in the size of the green candles, which are bullish. You want to see them becoming smaller and smaller as they're coming to resistance. This will tell you that momentum is losing. The buyers are losing momentum. They're taking their profits. Okay, and they take profits. What are meaning? This the sellers will be more than the buyers. Then the price was most likely to what? To reverse, going to the downside. All right. So you want to see that price is being rejected quickly and the price is closing bearishly. It tells you that price is most likely to reverse because people will be looking to sell at resistance. All right. So what other candlestick patterns are you supposed to look for at resistance? You want to find bearish reversal patterns, just like the opposite of what we talked about earlier. One shooting star. You want to find a shooting star. You want to find the bearish engulfing pattern. You want to find an evening star, a tracer top, gravestone doji, hanging man, the three green red soldiers, the dark cloud. These are most important. There are a lot of candlesticks out there, but these are very important. If you can master these ones and know them, know what they mean and their interpretations, it'll be very easy for you to take these trades. Okay, let's move on. So these are the candlestick patterns that we're talking about. This is how they look. If you don't know, this is the first time you're seeing these ones, I have a book, I've got books which explain all this. Or you can contact me on my WhatsApp, I'll be able to explain all this. Okay, let's move on. So those are some of the bearish reversal patterns. Just like I've said, when you trade using these ones, you have multiple confluences. You have an edge in the market and you only take hyper-beat trades. Okay, that's all when it comes to support and resistance. Okay, that's what you're supposed to know and master when it comes to support resistance, how to draw them, and how to trade them. All right, it's impossible to talk about support. I mean stop loss and take profits when you're talking about trading. And when you're talking about support and resistance. So the next question is, where should I put my stop loss and where should I take my take profit when I'm trading support and resistance? Well, I'm here to tell you that. Listen, have you ever placed a trade nicely with multiple confluences only for price to take you out and price went in your direction that you analyzed? Oh wait, have you ever taken a trade where price went in your favor but failed to hit your take profit and then going back and only to hit your stop loss, or you had to go out with on a break even? If any of the above situations sounds familiar, then you are either a victim of a stop run or just put your stop loss too near to support or resistance. So if price went in your favor and failed to hit your take profit, you are most likely being greedy and you place the stop loss, a take profit exactly at support or resistance. Listen, don't put your stop loss at support. I mean, you take profit at support or at resistance. Not always. It's not always that price will reach those areas. So always, if you're buying, put your stop. You take profit before support. If you're selling, put you take profit below before support. Like that, you'll be able to price will be able to hit the take profit. Okay, let's move on. So it's very easy and it's very easy to be carried away and to be greedy in the market because you want to get all the profits, right? You want only to risk very little. Trading like that is not very wise. Let me tell you how you should place your stop loss and you take profit. So, what is a stop loss? What is this animal? Well, a stop loss is actually a guardian angel that protects us from going into further losses just in case our analysis is wrong. And it automatically cuts our trades. And unfortunately, some people don't like to trade with a stop loss. Listen, always use a stop loss. it will save you from going into further losses. Okay, so always remember that a stop loss is something that's meant to protect your account. All right, I remember one scenario where Them was a beginner. Them was a very beginner. Someone gave me a signal and said, uh, "Sell, right?" And stop loss open, take profit open. What that means is that don't put stop loss to put a take profit. And do you guess what happened? Price, instead of price going down, price went up crazy. And fortunately enough, I didn't take that trade. And if that guy took that trade though, I'm really sorry for him because the price went like, I don't know, over 200 pips in a negative. And if you are like that, then you're in a mess, man. You're in a mess. So please always put a stop loss. No matter how confident your setup your setup is, okay? We all go through losses. So a stop loss is supposed to be there for you. It's supposed to be there to protect your account. Okay, why should you put a stop loss? What are the reasons why you should put a stop loss? What are the other reasons as into why you should put a stop loss? Of course, other than it being there to protect your account when your analysis is wrong, it's also there to invalidate the trading setup. So put it at an area where if it hits a stop loss, then your analysis is invalidated. Like that, you learn better and you'll be able to analyze even so much better. You learn more from failure than you ever do on success. So learn from your mistakes, learn from your failed trades, and become a better trader overall. So look at this. We have our support, right? And we have our resistance there. Support and resistance. This is a good support because it was previous resistance now turned into support. This is very good, and this is an all-time high. All right, price came here, came down, price went there again, came down, making more like what you call a triple top. And the triple top, this is a bearish reversal pattern or chart, a chart pattern. It's a bearish reversal pattern, and we're saying that we should look to sell when price comes here, right? And price is already there, and you look at this, price is already showing rejection, and that's what you look for. Compare this candlestick, the candlesticks here and here. You realize that they're becoming smaller as they're approaching this resistance here. So therefore, it's a good time for you to look for selling opportunities here. You can even go to the lower time frame and look for selling opportunities just there. Okay, so when you see this, look at this. Where did I put my stop loss? My stop loss placement was not just at resistance there, it was slightly above resistance because I'm trying to give my stop loss some breathing space so that if I'm wrong, I should not lose much. Okay, but again, I should give it enough room so that just in case you just want to like to just take out this previous high, maybe it goes up to there, maybe I'll still be in the trade. The sad thing that can never happen is price takes you out and continues to go in a direction. That's very sad. Okay, so always give it some room to breathe. Give your trades room to breathe. Okay, like that, you won't experience any stop outs and stop runs, and market goes in your favor. That's very painful, by the way. So give it some room. Okay, so this is what you say: sell at resistance and buy at support. If you bought here, you'd have gotten profits from there. You bought here, you'd have gotten some profit from there. If you sold from here, you see what happened? Price didn't reach here. If you were too greedy, like I'm trying to be here, you're not going to get any because price will still reverse back and take you out, or you go out on a break even. So always give it some time, give your stop loss a little bit of room to breathe so that your trade can breathe. The market doesn't move in a straight line. The market moves in phases. If it's going up, it will move in higher highs and higher lows. If it's going down, it will move in lower lows and lower highs. Please remember that. So always give your trades room to breathe. Okay, so let's move on. So I want to tell you how many people should risk exactly, because we all have different risk tolerance. I don't know how much you have in your account. Okay, so use what you're comfortable losing. So a stop loss is something to be. You should take it like something like this. How much are you willing to lose per trade? Okay. So they say only risk 1 to 3% of your account. So only risk that much, and like that you stay a long time in the game. Otherwise, if you try to risk more, you won't last for a long time. So only personally, I use 25 to 40 pips stop loss. So I'm not risking too much. I'm risking just fair enough. I'm also giving my trade room to breathe. Okay, and also find your risk tolerance. I don't know how much you're willing to lose per trade. So find that. Okay, and always trade. Don't just trade any trade that you see. Try to find high probability trades. Like that, your risk to reward ratio will be so much better. And like just trying to trade a 1 to 1 or 1 to 2. Wait for this way 1 to 3, 1 to 4, and above. Like that, even if you lost 5 trades in a row and you won 5 trades in a row and all of them they're hitting your take profit, you'll be good because your risk reward ratio is super. Okay, you can alternatively use the indicator code, the average true range ATR. This shows how volatile the market is, and it will give you an approximation of how much the market is moving. So you can use that figure as a stop loss. Take profit. So whenever you're trading, you always want to know where you're going to be taken out, where you want to be taken out, and where you want to get the profits from. So if you are trading in support and resistance, always put your take profit before resistance if you're buying and before support if you're selling. Because just like we saw here, price don't always reach those areas. So if we're looking at this, price came from here up to here. This is a lot of pips. This is on the daily chart, so it's a lot of pips. So you like if you caught this, you'd have walked away happy. And like holding this and price doesn't reach you take profit and price goes against you like this, you'll be hoping that it comes down instead of taking profits from here. So always do that. We also talk about in another video we'll look at what we call trading stop loss, so that you learn how to use it in similar situations. Okay, so don't make a mistake of putting your take profit exactly at support or resistance. So always leave some space because it's not always that price will reach support and resistance. Alright, so this is where you put your take profit. Remember, I'm putting my take profit here, not exactly at support. Alright, so it's slightly before support, because I'm not putting it exactly at support because price might not reach there like what happened previously. So I'm trying to be conservative here, trying to catch some few pips and take some few trips. All right, let's go. So if you reached this end, congratulations to you. I'm sure you enjoyed. I have no doubt about that one. If you stuck up to this end, I'm sure you've absorbed so much knowledge, and if you did, I'm really thankful. And please, you can comment down in the comment section on what topics you would want me to cover. I will gladly do that. So please, always remember to keep learning and keep practicing. Yours truly, Mathis Chivunda, and I'm out. Thank you.